Module 3 of Advanced Audit and Assurance on performing the audit of historical financial information, prepared by Akmal Hisham bin Ramli, Amiruddin bin Azharuddin, and Nur Emilia Shafika binti Zulkifli. First one is key principles. An auditor should have sufficient appropriate audit evidence in order to form an audit opinion. Sufficiency relates to the quantity of audit evidence obtained. Appropriateness refers to the relevance and reliability of audit evidence. Reliability is influenced by both its sources and its nature. Next, generalization of reliability. Evidence is more reliable when it is obtained from independent sources outside the entity. The second one is internal evidence is more reliable when the related internal controls are effective. The third one is evidence obtained directly by the auditor is more reliable than that obtained indirectly or by inference by others. The fourth one is evidence in the form of documents and written representation is more reliable than oral representations. And the last one is audit evidence provided by original documents is more reliable than audit evidence provided by photocopies or facsimiles. Okay, financial statement assertions. They have two financial statement assertions. The first one is assertions about classes of transactions and events and related disclosures for the period under audits. For this type of assertions, it have acronym of COCA-CP. The first C is completeness. The second one is accuracy, the third one is cut off, the fourth one is accuracy, the fifth one is classification, and the last one is presentations. The second type of assertions is assertions about account balances and related disclosures at the period end. For these assertions, they have acronym of CARE-CP. The first C is completeness, second one is accuracy, valuations, and allocations. The third one is rights and obligations. The fourth one is existence. The fifth one is classification. And the last one is presentations. Next, we move on to audit procedures. They have two types of audit procedures. The first one is test of controls. For test of control, the auditor must establish the reliance to be placed on the internal control systems. It supports and assess level of control risk. The second one is substantive test. Substantive test is performed to detect material misstatement in the financial report assertions and to reduce the auditor's detection risk to an acceptable level. Okay, type test of controls. Objective of test of control is to obtain evidence on whether the controls operated in accordance with the auditor's understandings and as documented during the risk assessment process. The second one is to confirm whether the controls function effectively throughout the period of intended reliance. Okay, they have five techniques of evidence gathering. The first one is inspection of physical evidence. The example of inspection of physical evidence is whereby the auditor went to the client's company and check on their stock or check on the document of the clients. The second one is observation. Observation is whereby the auditor observe the work of their clients. The third one is inquiry. Inquiry is whereby the auditor asks the client to provide them some document regarding sales invoice, purchase invoice, and delivery order. The next one is re-performance. Re-performance is whereby the auditor redo the technique that they have been implemented, such as the auditor re-perform the inspection of physical evidence, re-perform the observation, and re-perform the re-asking the inquiry from the clients. The fifth one is computer-assisted audit techniques, whereby the auditor use system for checking on their client's documents. Two types of CATs for test of controls. The first one is test data. Test data involve auditor create simulated dummy transaction to test specific controls in computer software. To provide direct evidence about the existence and effectiveness of software controls, and to assess independently the existence, effectiveness, and continuity of software controls. The second type of CATS is integrated test facility, whereby the auditor establish dummy entity on the live master files. Transactions are then processed by the program using both realized transactions, and auditor create the ITF transaction during the period of audit interest. The next one is sampling techniques for testing controls. They have three sampling techniques. The first one is random selections. For random selection, each sampling technique unit making up to the account balances or classes of transaction has an equal chances of selections. This item will be selected randomly by the auditor, and this is the best sampling technique for collecting audit evidence. The second one is systematic selection, whereby the auditor select every NOS item in the populations. Interval being determined by dividing the number of items in the population by the sample size, and then selecting a random starting point. The last one is haphazard selection, whereby selecting sampling units without any conscious bias and in a manner that the drawn sample can be expected to be representative of the populations. And that's all from me. Thank you.
Good evening, I'm Amiruddin bin Azharuddin, and I will present on subtopic 3.3 and 3.4. Alright, I will now talk about subtopic 3.3, substantive audit procedures. There are two types of substantive audit procedures. The first will be substantive analytical procedures. The other, test of details. Substantive analytical procedures. There are two types of analytical procedures. The first are analytical procedures performed as risk assessment procedures. This was discussed in Module 2. And the other, substantive analytical procedures. Substantive analytical procedures are procedures to gather evidence concerning individual items of financial information. They are used during the audit as a substantive procedure to either replace or verify test of details. For instance, in a case of fire at a warehouse where its inventory is irrecoverable, substantive analytical procedures may be used. Next are levels of assurance that can be obtained through substantive analytical procedures. A high level of assurance that is obtained means that there is low level of risk of material misstatement. Next, examples of effective substantive analytical procedures include sales, commission expense, payroll expense, amortization expense, payroll accruals. Next, the reliability of data. Auditors must determine whether data is reliable, which requires four considerations, which are the source of the information, whether the information is comparable, whether the information is whether sufficiently precise expectation can be developed, whether there is whether the difference from an expectation is acceptable. Next, the use of reasonable tests as substantive analytical procedures. Reasonable tests are computations that calculate an expected amount by using financial or non-financial data as independent variables. Example, If sales were 100 million and the sales commission rate was 8%, then the auditor would expect 8 million commission expense. Next, the relationship between substantive analytical procedures and other audit procedures. Whenever a substantive analytical procedure on financial information is proposed, its effect on the other audit procedures proposed to be undertaken should be considered, because it may cause other tests of details to be reduced. Tests of detail. Tests of detail include tests of transactions and account balances. They are designed to obtain direct evidence aimed at reducing the risk of material misstatement for a particular account. The nature of tests of detail depends on the type of account being audited and assertions identified as being at risk. Example, to confirm the existence of an asset, the auditor must physically verify its existence and title. Next, to confirm the existence of a bank balance, the auditor must obtain a letter from the bank confirming the account balance. Next, tests of transactions and account balances. The auditor can directly test the individual transactions that cause an account balance to increase or decrease, or use another approach, which is to test directly the account balances as test of balances, year-end balances. During tests of details for a particular class of transaction or account balance, the auditor's objectives are to obtain sufficient appropriate evidence concerning management assertions that are considered material. There are two types of account balances. The first is external confirmations and attendance at physical inventory counts. External confirmations provide evidence about the completeness of a liability and the existence of an asset. They are less relevant to the valuation and allocation assertion. Next, bank confirmations are used to obtain audit evidence concerning a client's dealings with its bank. The auditor would normally send such requests when the entity's banking activities are significant, complex, or unusual. Moving on, attendance at physical inventory counts. When inventory is assessed as material, the auditor is required to obtain sufficient appropriate audit evidence regarding its existence and condition by attendance at a physical inventory count unless it is impractical. Direction of testing. Vouching and tracing. Vouching involves testing from the accounting record to the source document or underlying assets' existence. Tracing involves testing from the source documents or underlying assets to the accounting records to test for completeness. Next, using computer-assisted audit techniques for substantive testing. Audit software consists of computer programs used by the auditor to identify and process data of audit significance from IT system. Audit software techniques are designed to read the client's files and data, in particular the transactions and master files. This enables routine audit tasks to be undertaken and directs the auditor's attention to areas of risk and materiality that require further audit consideration. Next, audit software may consist of generalized audit software, applicable to a wide variety of audit situations, and purpose-written programs, customized to suit a particular audit situation. Next, utility programs and systems management programs. Utility programs are used by the entity to perform common data processing functions such as sorting, creating, and printing computer files. They may not contain some features that the auditor would like, as they are not designed for the audit purposes. Next, system management programs are typically part of a sophisticated operating systems environment. An auditor does not need to start from scratch to obtain the benefit of their processing capabilities that are of audit interest. Advanced audit data analytic techniques, also commonly referred to as big data, which can analyze complete data sets, entire sets, used at the audit planning stage and as part of these evidence gathering procedures to identify and assess risk. Sampling techniques in substantive procedures. Monetary unit sampling. Monetary unit sampling is a statistical technique that provides an estimate of the maximum amount of overstatement of a recorded amount with measurable levels of risk of making a decision error. A monetary unit sampling sample is inappropriate when the auditor is testing for understatement, because an understatement results in less chance of selection. Moving on, evaluation of substantive procedures, sample results. The auditor is required to evaluate the sample results and whether the use of sampling has provided a reasonable basis to conclude on the population. Moving on, 3.4, evidence gathering in an e-commerce environment. Test of controls in an e-commerce environment. The types of e-commerce environments include business to business and business to consumer. First, the business to business environment. There are a limited number of known parties with whom the business is transacting. Usually, that's an authorization system between the two business partners. Testing of the authorization system will usually be conducted as part of the review of the general controls by the auditor. General controls. Okay, next. The other environment is business to consumer. Authorization of business to consumer transactions is different. It is on many occasions established through the payment system. The auditor will check the controls set up in the entity to ensure that proper control checks are undertaken. Moving on, in an e-commerce environment, electronic records may be more easily destroyed or altered than paper records. The auditor must consider whether the client's security controls are adequate to prevent unauthorized changes to the accounting system or records. Testing of controls in an e-commerce environment is important because systems are more open to external transactions, to direct access and direct recording. Therefore, the auditor should be able to verify these amounts using substantive audit procedures discussed earlier. Using computer-assisted audit techniques in an e-commerce environment. Both audit software techniques and test data techniques are often used by auditors to gather evidence in an e-commerce environment. The need for such techniques has increased as a consequence of the level of integration of e-commerce systems with other operating systems and availability of audit trails. Moving on, advanced data analytical techniques and continuous audit in an e-com environment is that advanced audit data analytic techniques that were discussed earlier in this module are particularly applicable to e-commerce environments. The recent advances in technology to analyze the large amounts of data captured allows for more frequent or continuous monitoring of transactions by external auditors. That's all. Thank you.
Hello, my name is Akmal Hisham bin Ramli. Today, I would like to talk about the advanced evidence gathering issue. For this area, it is about the audit procedure for related parties. The auditor is normally act more skeptical because of their nature. There are some reasons as the auditor acts like that. First is about the related parties can arise as a result of complicated corporate arrangement. Second is about the accounting framework requires specific disclosure. And third is about any transaction between related parties may not be permitted under regular market condition. For this area, it also required that ISA 550 to obtain a sufficient understanding. The auditor should inspect the following documents and records for the related parties not previously or been identified and disclosure. So the auditor also should obtain an electronic copy of the transaction by import them into the spreadsheets. The auditor also can obtain information by sorting and configuring the selection of the criteria. Other than that, the auditor must consider any possible fraud that can be occur in the business. The lack of a business rationale may suggest that there is a higher risk of fraud associated with this transaction. Management may not have information about related parties, as it is unlikely that accounting system would have been designed to identify the related parties. Okay, next. This area is about using the work of other auditor and expert. There are 3 ISA which are 600, 610 and 620. So, For the first is about the ISA 600 is about special consideration, which also called as a component auditor. They are perform their work related to the group of auditor, example the subsidiary. When relying on their work, they should assess whether they understand the relevant ethical requirements and obtain information regarding the professional competence of the component. Okay, for the ISA 610, it's a revised ISA that using the work of the internal audit. External audits needs to assess whether it is adequate to determine whether the work performed by the internal audit function is likely to be relevant to the external audit. The external audit work can be used to determine the extent in the specific work of internal audit. So, the internal audit should not be relied upon the performed by the same extent because the external auditor cannot be found to have the same level of the knowledge as the rest of the public about what happened to them. Okay, for ISA 620 is the using the work of an auditor's expert. An auditor should consider the nature and the risk of material misstatement of the matter to which the expert's work relates. The auditor also need to have sufficient understanding to allow them to determine whether their work is sufficient for the purpose of the audit. So the audit firm should not mention the work of an auditor's expert in its report unless it is required by law and regulation. Okay, next area is about the audit documentation. For audit documentation, we have three things, which is audit documentation, security, and the audit file. So for the audit documentation, there is a mandatory ISA, which is ISA 230, to prepare the audit documentation. It must be prepared on timely basis to understand first the nature, timing, and extent of the audit procedure performed. Next, to understand the result of the audit procedures and for the audit evidence obtained. And next is about the any significant matters that has been identified and conclusion reached thereon. Okay, for the security and the confidentiality, it is the accounting firm who is the one is being responsible to maintain the sufficient controls to protect the client data. The accounting firm also to includes the to responsible in take care of the data that is stored with the third parties, and there are many legal requirements that have been addressed for the data security. Last but not least is about for the audit file organization. So the audit documentation is usually organized into logical section of work and may be recorded electronically using the folder and subfolder. The consistency of the index system will bring advantages as it is provide the consistency between the audit files. Okay, last but not least is about the evaluation of the audit evidence. They are divided into two parts, which is the first step. The first part is about the misstatement of audit evidence, and the final part is about the sufficient and appropriateness of the evidence. So, for the misstatement of audit evidence, the auditor is required to communicate any uncorrected misstatement to those charged with the governance. There are some lists of the misstatement of the audit evidence, which is the first is the inaccuracy in gathering and processing data, omission of an amount of disclosure, incorrect accounting estimates, judgment of management concerning accounting estimates and appropriateness, classification, aggregation and segregation of the information. So we are going into the final steps, which is about the sufficient and appropriateness of the evidence and the materiality of the uncorrected misstatement. There are some factors that for the auditor should be considered to evaluate and easy for them, which are the first is materiality of the misstatement, management responses to audit findings, previous experience in similar procedure, result of audit procedure performed, quality of the information to support the audit conclusion, and the persuasive of the audit evidence. So that's all from me what I for my presentation. So thank you. Bye bye.